Next in the agenda is another valuable speech by an esteemed personnel, Professor Rotem Shneor. To introduce the keynote speaker to the gathering, I invite Dr. Rasika Priyankara, Head Department of Business Management, Faculty of Management Studies, Sabaragama University of Sri Lanka.
Very good morning, everyone, and wish all of you a beautiful day. It's indeed a pleasure for me to introduce one of the best academics in an upcoming area in finance. Let me introduce Dr. Rotem Shneor. Dr. Shneor is an associate professor at the University of Agder, School of Business and Law in Norway, and he serves as the academic director of the university's Center of Entrepreneurship, as well as the founder and head of the university's Crowdfunding Research Center. In addition, he is serving as an affiliate researcher at the Cambridge Center for Alternative Finance and serves as a key contributor and co-author to its annual Alternative Finance Industry benchmarking reports. He holds a PhD in International Management from University of Agder and a master's degree from the Norwegian School of Economics. Intertwined with his academic work, Dr. Shneor has also established the Nordic Crowdfunding Alliance of Platforms, as well as co-founded and currently serves on the board of the Norwegian Crowdfunding Association. His research covers crowdfunding success, behavior and innovations, internet marketing, and cognitive aspects of entrepreneurship. He has a record of 2 decades in teaching, researching, and supporting entrepreneurship at local, national, and international levels. He has published in many reputed journals, trade magazines, as well as contributed several chapters to research-focused edited books and textbooks. Recently, he has served as lead editor and contributor in an edited volume on advances in crowdfunding, research and practice, published by Palgrove Macmillan in 2020. So, please welcome Dr. Rotem Shneor to deliver the next keynote speech of the 5th ICMR 2020. Dr. Shneor, it's over to you now.
Okay. Good afternoon. Can you hear me? I'm not sure if you can hear me. Okay, great. So, good afternoon, Sri Lanka, and good morning from Norway. Great to be with you. Thank you so much for the kind invitation to participate in your conference. It's a great pleasure to present to you an interesting and exciting new field, particularly crowdfunding. I will present to you some key facts and in basics, what crowdfunding is and what's the situation today in the world. And I hope we can have some questions and answers later on. So first of all, what is crowdfunding? It's an old practice where we raise funding or we fundraise a project by collecting many small sums from multiple people. So instead of depending on a single or few major contributors, we enjoy small contributions from many different people. Now, this has existed for a very long time, but thanks to internet, we're able to do it to a larger scale, speed, and scope than ever before. So as we engage in this, whoever attempts this fundraising both gets the funding that they need, but at the same time is able to check their ideas, fine-tune them, get feedback from them, engage with relevant target audiences, and get valuable comments and suggestions on how they can improve it. At the same time, this is also an opportunity to recruit new customers. And everybody who has worked a little bit with sales knows that it's difficult to sell, but especially when you are a new business or a very small venture, which is unknown with not so well-known brand. So all of these are some of the benefits that can be enjoyed at the individual level or the fundraiser level, but also there's a macro level implications that we are able to fund more projects than ever before. We are able to engage more people in the funding, and in the longer term, from an investment perspective and financial access perspective, this could also help reduce some inequalities in societies in the long term. So how does this work? It's basically an interaction between three players where everybody wins. The platform is a website application on which fundraisers and backers meet and interact, exchange information, and make contributions. From the campaign creator, the benefit is that they don't need to build their own fundraising channel and website and systems and ensure legal compliance and make all the agreements with the payment service providers and so on. They get the IT infrastructure already in place and an access to a network of supporters. On the supporters end, they get the trust facilitator that qualifies the different campaigns and the different calls for funding. They get information about possibilities to either support or invest, and they have the opportunity to influence the type of products and services that will be delivered in the future. So everybody has something to gain. The platform earns commissions on successful campaigns. The creators get their money, the support, the feedback, the fans, the followers, and the backers enjoy an opportunity to contribute, to influence, and to engage in fascinating projects. So where is all of this coming from? Well, first and foremost, it's from this chronic shortage of funding to critical groups, and especially entrepreneurs, artists, social activists, could be sports people, could be political initiatives, whatever it may be. There's not endless funding out there, and it's not that easy to access. Particularly when we look into entrepreneurship, we see that there is a problem with an SME funding gap. In a recent report by the World Bank, looking into this in 128 developing and emerging economy, this gap has reached $5.2 trillion. This reflects 60% of the demands for finance by SMEs in these countries and account to close to 20% of the GDP of these economies. Specifically in Sri Lanka, the gap was estimated at $17 billion or 21% of GDP. So somebody needs to provide this finance, and if the traditional financial mechanisms and channels do not fill these gaps, then it's time to look for alternative sources. At the same time, all of us live ever more digital lives. Today we're running a digital virtual conference. We use social media, we engage in e-commerce, mobile payments, and many, many services that are available online today. So this technological change, the social change, and at the same time, this growing disillusion by the ability of the traditional financial institutions to fill necessary gaps. This is where this is emerging. But when we talk about crowdfunding very broadly, it's important to understand that crowdfunding is not one thing, it's an umbrella term. And the umbrella term includes both investment and non-investment models. So many of you, if you've ever heard the term crowdfunding, probably heard about the non-investment version of it, which is either reward or donation. Donation is basically, for the money that you give, you don't get anything tangible back beyond this joy or satisfaction from influencing something that you care about. In reward crowdfunding, for the money that you give, you pre-purchase products before they are produced. And this is very important for entrepreneurs because it allows them to ensure cash and funding and demand before they actually spend the money on production, shipment, and distribution. But these type of models are actually a minority in the overall scheme of things, and most of the money goes through investment crowdfunding. Investment crowdfunding is divided into three main models. One of them is equity. For the money that you give, you get an ownership stake or shares in a company. One variant of it is revenue or profit sharing, where for the money that you give, you don't have an ownership stake in a company, but you have a right to a future income or profit stream. So for every unit sold, you get a certain share of income from that sale. Lending is old-style lending. For the money that you give, you get that money back plus interest within a set period of time and under certain conditions. And this works in two different models, either peer-to-peer, where the contract is really directly between the lender and the borrower, and the platform is just a matchmaker between the two, and the money never passes through the platform itself, but goes through a third-party financial intermediary, or a balance sheet, where the platform itself gives the loans on behalf of crowd lenders. But this requires different type of licensing. Finally, there's invoice trading, and invoice trading is not about fundraising, but just easing of cash flows. So you are able to sell future income for a lower income today. So if you have a company and you have an order from a different company, but they will only pay you in 3 months from now, then maybe you can get 99% of that money today, while somebody else will get 100% of the money in 3 months from now, and that 1% is their profit. Okay, so these are the three main models. When we look into the volumes, then in 2018, global volumes are $305 billion US. But when you compare these two bars, the orange and the blue, the orange includes China, the blue excludes China. So China is by far the most important market, or the largest market to have adopted this alternative finance mechanisms. But since they have seen such huge growth and large volumes very fast. In recent years, the government have started to crack down on this and to look how to regulate this even better and in a more strict way. And this is why you see this slight decline between 2017 to 2018. But this is only a China story. Everywhere else in the world where regulation and adoption has been more gradual and more controlled, we can see that the growth just continues. And between 2017 and 2018, basically almost 50% growth, up to $89 billion US. At the right side here, you can see the regional share of crowdfunding. So China takes 71% of global volumes today, but Asia Pacific, which is all the rest of Asia and Oceania, is 2% of global volumes. Now, why it's important to stress the story of China is because China is an example of an emerging market where existing financial systems did not serve well all those audiences that need this access to funding, especially small scale or higher risk entrepreneurship. And then this whole alternative market emerged and they leapfrogged other environments into adoption of digital solutions. So this could be something for other emerging markets to look into as a very valuable source of income. I know you may not be able to see all the details of the numbers here, but this is just to stress that most of the money goes into lending. Although we talked about these different types of models, 98% of the volumes, when we include China, actually relates to different versions of lending. When we exclude China, it's 92% of the total volumes. All the other models, the equity, the rewards, and the donations are much, much smaller as of today. When we look into Asia Pacific, since we are now in Sri Lanka, we can see that in 2018 volumes were $6.2 billion. We can see that this takes about 9% of global volumes when we exclude China. And as you can see from the growth rates, it's quite high growth rates, consistent throughout the years, and there's no reason to expect anything different in upcoming years, because although this is 6.2 billion, there's so much more untapped market out there to grasp. Here, this is to show you, there's a lot of numbers here, but when we divide the volumes in Asia Pacific, we see that again, similar to everywhere else, 87% of the volumes are in different models of lending, 7% of the volumes are in different models of equity, 4.5% are in the non-investment, the reward and donation, and 1.5% is in invoice trading. Now, it's very important to highlight some points here is that it seems that on the equity side, real estate is considered to be a lower risk category within high risk category investments. And the real estate is becoming a very prominent element in equity investments. On the lending side, although some of these loans might be defined as consumer loans, what they actually are individual entrepreneurs taking personal loans for starting up small businesses. And they're not necessarily really aimed for consumption only. When we further divide the Asia Pacific into sub-regions, we see that currently the biggest one is Southeast Asia, and the champion here is Indonesia by far. East Asia, very nice growth volumes as well. Here the leaders are Japan and Korea. In Oceania, it's Australia. And in South and Central Asia, it is India. Or another way to look at it, the 5 top markets today in the Asia Pacific are basically Indonesia, Australia, Japan, South Korea, and India, which together account for 81% of the volumes in overall Asia Pacific region. Most of them, with 3 of them actually above the $1 billion volumes already in 2018. The next interesting thing is to consider what are the onboarding rates versus the success rate. So if people actually go for that, what's the chances for them to succeed in getting the money that they want? So this is divided into two steps. One is the platform actually needs to qualify you or approve you or accept you and do all the necessary assessments and due diligence and risk evaluations before they actually allow such publications. There's some legal compliance here, but there's also some more qualitative analysis to ensure that this is serious, reliable, and traceable. So this is onboarding, the percent of campaigns that are actually approved for publication. Success is, out of those that were approved for publication, how many of them reached the sum that they aimed to raise? Here in the first graph, we see different lending models, and I highlighted with this red dotted lines the Asia Pacific bars. So we can see that in the example of peer-to-peer business lending, in Asia Pacific, 29% of the campaigns get approved, which means 2/3 don't get approved or are excluded. But among the 1/3 that is published and have done a good job in preparation, 92% of them are successful. Similarly, in the real estate or the property lending, we see 15% approval rates, but 96% success rates. When we move to the equity models, we see that in equity, 38% of the projects are approved, 60% are successful, and in real estate investments, 23% approved, 98% success. When we go into the non-investment models, in reward, 69% approved and 2/3, 67% successful, and on the donation side, similar number as well. So what this means is that actually crowdfunding today is the best way to get the money. There's nowhere else in the world that same level and chances of actually getting funding. The worst case scenario is that you have a 2 to 3 chance of getting the funding. So if you do a good preparation, if you make quality campaigns, if you provide all the necessary materials and answer the necessary questions and legal compliance, you have a very good chance of getting the money you want today. Another aspect of this that is important to stress is that although we call this crowdfunding and we talk about democratization of finance and allowing everybody to participate, a considerable share of funding actually comes from what we consider as traditional financial institutions. So in the Asia Pacific region, actually 1/3 of the volume comes from traditional financial institutions. Banks, pensions funds, insurance companies, all sorts of very traditional financial investment and wealth management and other type of companies participate in this market. So a bank can tell no to a loan in the bank office, but then give you that same loan through a crowdfunding platform, because now it sits on the platform's accounts and not on the bank's accounts, when they don't have that level of appetite for risk, or when they are finding it too expensive to serve that loan or to that fundraising goal. Now, very broadly, what makes a good environment for crowdfunding? Here you can see the plotting of, this is only Asian countries, most relevant for your context, between the volumes of crowdfunding per capita with the extent to which regulation is considered to be adequate by these platforms that operate in the market. And we see a very clear and significant correlation. So the more adequate the regulation, the higher the volumes. So we really need the regulators and the policymakers to look into this and amend regulations to enable this to both help the industry flourish and at the same time ensure investor protection, consumer protection, and so on. And there's many good initiatives in this direction. Just very recently, the European Union and the European Parliament have passed European crowdfunding service provider regime that will apply to all European countries and will also allow cross-border transactions and investments. So this could be a model for other countries to look at and adopt. The other issue beyond regulation is social trust. So the more socially trusting a society is, the higher the volume, because this does require a certain level of belief that other people will deliver, that using digital payments, digital money is safe, online transactions, and so on. Now, but there's many things that can be done to enhance people's sense of trust, ensuring quality controls at the platform level, investing in business case recruitments and ensuring they are the best, adding website security features, certifications, and really ensuring a lot of transparency throughout the process about how the money is raised, from where, for what purpose, and how it is used. You can also use endorsers, celebrities, others to, again, gain the trust of people who follow them. And most importantly, in emerging markets, is to tightly integrate social media and word-of-mouth features and channels with crowdfunding activity. I won't go through this in detail, but these are just to give you some examples of Sri Lankan cases that have raised money successfully through crowdfunding platform. In Sri Lanka itself, there's 2 platforms that I am aware of that operate. One is an equity platform, Crowd Island, and one is a reward and donation platform, Tribes Fund. The other platforms that have activity in Sri Lanka are mostly international, either Kickstarter, Kiva, and others, but the volumes are still very small. So it's really an opportunity for this market to develop further based on these initial good examples of success of businesses that managed to raise a few million rupees for different projects and try it out. To conclude, I will just say that in the future, what we see is going to happen more and more is more harmonized regulation across countries and more regulatory amendments to adjust old financial or fundraising laws into the reality of internet and social media. At the platform level, platforms need to internationalize in order to scale, and they focus more and more on efficiency, streamlining, parallel to customer relationship enhancements. Campaigns constantly increase in quality, and the sums that are being raised are also increasing. And traditional finance is very engaged, interested, and involved, invests, strategically cooperates, and sometimes even owns platforms. And this collaboration between the traditional and alternative channels are only likely to increase and to be ever more elaborate. Now, I remember well that Sri Lanka is a Buddhist majority country, and I think that the Buddha has some good things to tell us about crowdfunding. So why to use crowdfunding or fundraising? I like this quote: if you don't go after what you want, you'll never have it. If you don't ask, the answer is always no. If you don't step forward, you're always in the same place. And on the side of the contributors, before giving, the mind of the giver is happy. While giving, the mind of the giver is peaceful. And having given, the mind of the giver is uplifted. And if all else fails, no one has ever become poor by giving. So it's a nice thing to embrace, help other, and help society and the economy flourish with alternative channels to finance that is badly needed and is not supported from other sources. I will just throw in here 2 sources that are freely available online. If you're interested in this further, we will share these slides, I hope, and you can access them, read a little more, get interesting facts, figures, and background information. And with that, I will conclude. So thank you.